Hey everyone, hopefully you're having a good day. My name's Andy. My channel's Finding Value. Today we're going to go over some information on Twitter about commodities. A lot of it's energy related, oil, natural gas, stuff like that, and uranium. If you want to follow me on Twitter, all you have to do is put in @FindingFinance. So there we are right there, @FindingFinance, if you want to join me and see what I'm retweeting and tweeting myself. So let's dive in here. Let's take a look at what's going on around the world and what people are talking about. And I'll give you my financial opinion along the way and describe kind of why it's a big deal. It says, is U.S. shale in a death spiral? I think it is in terms of oil. It says the U.S.'s big shale oil basins are getting less productive. And we were coming on up, and then boom, we've got this right-hand corner and we are heading lower. Now, this probably will level out at some point and then continue to go down. But I don't think the growth that we've seen from the shales is going to happen again. And remember, the decline rates in oil are declining between 5 and 10%, somewhere in that range. And if it's 8% or 7% decline rates around the world, that means every single year you have to find 7 million more barrels of oil to stay flat. And I don't know. We'll see. We'll see if we can actually stay flat. I think we're going to struggle to increase production going forward here. Not just America, everywhere, the entire world. I think we are in a global energy crisis, and I don't know if we've got great solutions outside of nuclear. I think we're going to have to ramp nuclear like no other. But that's my take. Here's the energy stocks to oil ratio continues to move higher, firming up its recent breakout from a 7-year resistance. This is incredibly bullish setup for energy as a whole. And I know, I've gotten some incredible returns in oil and natural gas. And this is what's crazy is energy stocks have not been outperforming oil. And what I think is coming is going to be probably a pretty epic move in energy stocks in general. This one's XOP in relationship to oil. So XOP, I do own actually a pretty big amount in XOP in my 401k. I also like URNM, which is another uranium ETF, and OIH, which is oil service companies. But we're just breaking out of this thing. We're just getting this party started, guys. And, I'll go through some more information. Hopefully I've retweeted it with Biden thinking that they're going to, refill their SPR at $80 a barrel. But I've got my opinions there. But we've got energy stocks here. It is rolling higher. It's going to go massively higher when this thing compresses against oil itself. And I think oil is going to go higher. I think we're going way higher. I mean, like potential, put a 1 in front of where we're at today. At least that. Maybe even a 2 or a 3. But we'll see. That's getting ahead of ourselves. But this looks good for energy stocks to outperform. This is our crude storage with SPR. We are continuing to draw this down. This has to reverse at some point. What this is going to tell us is that we are far too low for the prices. And, we had higher prices, even not that long ago when we had $120 a barrel. We had far more inventory back then. And we're still drawing it all down with far lower prices. They say one thing that will solve this is demand destruction. I don't know how you have demand destruction and the price go down. I don't think that's possible. It's kind of like... I'm sure Saudi Arabia is sitting back, scratching their head going, yeah, you guys are just playing this paper game. And, I think we're losing the Saudis. We're losing that relationship. And we would lose that relationship and they just say, you know what, screw it. We're going to cut the barrels to the market. This thing's going to dramatically drop and we're going to eat through all our inventory. Then we're going to be really in a bad situation in terms of how much oil there is and the pumping capacity of oil. We've never exceeded the pumping capacity of oil. I think we're going to test it here at some point, and you're going to see prices go ballistic. good opportunity in oil and natural gas and all energy-related investments. Here's the interest rates are going to continue to rise. The U.S. Treasuries chase inflation. I always say that too. The Fed funds rate chases the U.S. Treasuries. You're way behind the curve. Very possible to see the Fed funds rate catch up and overshoot above inflation rate, in my opinion. And what he's got here is the 2-year, the U.S. IRR, and then we've got the Fed funds, and they're way behind. And it's possible that this does overshoot the greenish yellowish line and go way up a couple percent above, which could be 12% or 10% or something like that if this rate stays up there. The thing that gets me worried, and it's not interest rate related, is they've been playing with these markets for a long time with a lot of different things. And this is all going to catch up to them. It's going to catch up to them, and it's going to absolutely screw them. They're playing with strategic petroleum reserve releases. They're draining our inventories. They're playing with the interest rates. They're playing with QE and money in the system all since 2008. If this stuff moves in the wrong direction against them, we could see some very big moves because there's so much money sloshing around in the system. And it's been pinned in certain investment sectors for so long that when that all comes unstuck and all comes released from those sectors and rotates into other ones, which it is actively rotating, it just takes time. We could see this even go higher. We could see a big old move higher in interest rates. And I know people are saying, well, we've already had a big move, it's over with. I'm not so sure about that. You drop that SPR, you get the demand coming back from China, and you see some of these barrels of oil come off the market in terms of Russia, in terms of natural decline rates, and with the Western technology kind of leaving, the drillers. You look at Saudi Arabia, they don't have much spare capacity. I think we're going to get super tight in oil over these next 5-10 years, maybe even indefinitely. I don't know what we've got. I don't know if investment's going to spur a lot more production. Maybe we've hit the peak. I don't know, but we'll find out. We're going to find out. Here's Camco to Dow Jones. This is the ratio. We've got that bottoming pattern, the rounding pattern that we're about to launch from. I'm still a little bit confused on how people think that this isn't going to be an epic bull run. We are experiencing market conditions that we've never seen before in a whole bunch of different things, like oil running into its pumping capacity of the world. Natural gas has already gone vertical. We went from 2-3 million MMBTU over in Europe all the way up to 90 in MMBTU. Basically went vertical. Yeah, it's coming back down, but to have these types of moves and then think that uranium is going to be insulated from it, I just don't think so. I think we're going to see a big move in uranium. And this is Camco, and you're going to see a large outperformance from the Dow Jones Industrial Average. Now, here's another thing that I want to talk about real quick is a lot of people think, they talk a lot about uranium and the sector of uranium. And they're saying, all this news flow is coming from uranium. I don't even think that's the most important thing for uranium to go higher. I think what's the most important thing is that people who are non-uranium holders that will eventually be future uranium holders, they need to get their butt in gear and shift their money out of other assets. The interest rates are going to cause that rotation. It's going to force them to get off their butts and do something with their investments because they're going to lose money if they don't. And if something's working, people usually stick with what's working. But if it's not working, then they take action. And we've seen it in history. All the uranium bull markets happened during commodity bull markets where there was money rotating from an increasing interest rate environment and higher inflation. It's no different this time, in my opinion. And I think that the non-uranium people are going to rotate money into energy. And I think that's where the money in the rotation is all going to come from, is increasing interest rates and higher inflation. Here's the silver, 2013 and 2016 fractal SIL. That is an ETF, SIL. There's the fractal coming down and then the launch. Here's the other fractal, and hopefully we get a launch here. I do see that the 10 to 30-year yield is also at a very low level like it was in 2016. It's very low level here. And hopefully we see a big move. But the fractal is very similar. We've got another 2% of platinum. NYMEX inventory is gone today. 229,000 ounces left. Here's something here. It says, when we get to the point that the SPR, Strategic Petroleum Reserve, ends, and oil is north of $85 a barrel, what then? Only thing left to look forward to is China demand rebounding and a metric ton of supply coming offline between the SPR and EU sanctions. This is the reality, in my opinion. And I don't see how this is that hard to see. Everyone's looking that we've got a slightly lower inflation rate, 8.3 versus 8.1 expected. The measurement error is probably plus or minus 1%. And everybody going so crazy over it, which is stupid. It really is. But I mean, you look at this and it's like, when we stop releasing from our inventories, do you think this is going to end well? I mean, I saw, was it Biden or someone else was saying that they were going to increase the Strategic Petroleum Reserve at $80 a barrel. How are you going to do that if the only way you got down to 80 is by dumping all your reserves? If you stop dumping those reserves, it's going to reverse so quick on your butt here that they're going to be adding it at $180 a barrel, not 80. Because you're going to have a shortage in the market, especially when they come and enter in and try buying 5 or 10 million barrels a week. They're not going to be able to do this. This is going to end so horribly. The only way they could make that work is if they throw the entire world into the most incredible depression possible on purpose. And then they're like, oh, we can buy oil for like 50, 60, 70, $80 a barrel. It's the only way they can do it, in my opinion. It says the energy crisis is more than just gasoline prices. Gas, coal, and electricity. The longer prices stay high, the more feed through into manufacturers and service costs, and the more inflation. Agreed. It says, I see so many that have made it their mission to be against the precious metals. I try to tell them to stop being that stubborn. Non-value adding behavior and getting your head straight. You will miss the greatest wealth transfer in history of mankind. Could have, should have. I agree. I'm a big platinum bull right now, physical metals. Heck, I'd even go into gold. It says crude oil and product inventories are pretty much flat year to date, including onshore, offshore, and in-transit volumes. What happens is China eventually reopens, plus 2 million barrels. Russian barrels when winter hits, minus 1 million. And SPR stops subsidizing commercial inventories. Yeah, I mean, it's just obvious to me that this isn't going to end well in terms of prices. OPEC reiterates warning that oil markets are disconnected from fundamentals. What do you think this means? Means that they're playing with the paper price. The JP Morgan most likely is the company doing it. They play with everything. We've got graphite still sleeping. There could be an opportunity in graphite. It says the massive impact on EVs, on commodities in one chart. Lithium, 2,900%. A 30 times increase for lithium. Cobalt, 2,000 times increase. Rare earth, 655%. Graphite, 500%. Nickel, 105%. These are massive increases in our use of some of these materials. I don't know if we can increase our production that much. We're obviously going to try to. That's pretty crazy there. It says 1 million of silver added to the Sprott PSLV. We're back, baby. The silver drain continues. And we're just taking ounces off the market from platinum and silver like no other. And probably gold. And we'll see how this ends. I think what they're doing is they're suppressing the prices of commodities. They're trying to suppress them down, oil and precious metals specifically. Why those? Oil is the number one commodity. It flows through everything through inflation. Precious metals is the attack on currencies. They don't want that to go up to show that there's a problem. They are probably in there doing a whole bunch of stuff and holding it down. It says, going to be completely honest, either I'm an idiot or the SPR ending is bullish. Taking 8 million barrels a week supply out of the market will be felt, even if it's never refilled. This doesn't seem like rocket science. It's not. It's not. It's coming, guys. Strategic Petroleum Reserve released today at 8.4 million barrels, largest release ever, and is now at the lowest level since October 1984. Says there's been a proliferation of big brains. Oh, that's fine. Talking about oil prices. I asked, are you afraid of a recession? No, 41%. It's confirming the it down trend break from last week. 50 WMA is proving to be resistance, but every touch weakens resistance. They're slamming on the doors for, this is Western uranium vanadium as it's breaking out to the upside. I still think it looks very bullish in uranium. We've got the never forget. They pulled this building. They even said they did for 7. Here's the 10-year Treasury yield. While it's likely that the 40-year bull market in bonds peaked in March 2020, when the 10-year reached the absurd yield of just 0.4%, bonds are deeply oversold and due for a counter-trend rally. Yeah, it's probably true, or maybe not. We'll see. But it's been going rapidly higher. And that's the 10-year 10-year yield just moving higher. I wrote this down. It says TTF Dutch natural gas up 87 times. Coal up 8.7 times. Oil minus 30 to 120. You can't divide by a negative. I don't know what that means in terms of an increase. And even if you consider this to be 0, it would still be an infinite gain. And then uranium, 18 to what? What's your guess? It's going way higher. That's my guess. It says they've supplied India with oil for decades. Russia has. India says it is importing Russian oil to manage inflation. They need the energy, guys. You don't go around walking around pissing off all your trade partners. Russia is going after the dollar and the euro, and it's going to try to crush those currencies and basically take those debts and implode them. This isn't a war about Ukraine. It's a war against the Western world. And I'm not mad because I understand their viewpoint. You can't just go out and print a bunch of money, be the reserve currency, and exchange it for a bunch of goods around the world forever. At some point, that's got to end. So, I understand their viewpoint as well. And this is him. This is Putin commenting on the loss of trust in the US dollar, the euro, the de-dollarization of global trade. He is making it clear here that the strategy of China, Russia, and the BRICS alliance against those currencies. And they're doing it just because of what I said. It says, I used this new slide in a speech. Today's EU fertilizer shutdowns are tomorrow's food shortages famine. 70% of Europe's fertilizer capacity has been shuttered. You notice that I've been buying the American fertilizer companies. Ammonia prices up 5x. China began restricting fertilizer exports October 2021. Russia began restricting exports in March of 2022. Fertilizer production in Europe is over. Africa facing shortages of at least 30 million metric tons of food. Look at this ammonia, the shortage here. Geez. That's profitability of dollars per ton. It's going negative. They're just shutting it all down. So that's also something on my radar. Fertilizers in the United States are going to become ultra valuable, I think. Another way to play this investment. And if you guys are interested, definitely subscribe to the Platinum membership, finding-value.com. Get in there and you can see the fertilizer companies that I like, that I talk about, and the energy service companies to benefit from all this. Here's something that's wild, and I think this is wild. I think it's completely stupid. It says, California is poised to phase out sales of new gas-powered cars August 25th. Then they come around a few days later. Breaking, California Power Grid declares flex alert, urges residents to not charge electric vehicles. What message are they sending here? Completely stupid. Go buy a bunch of electric vehicles, but don't charge them because we've got power problems. Yeah, that's brilliant. Just brilliant. It says the symmetry of the cup and handle is just on point. We're talking about the cup and handle of probably silver or gold here. Gold in relationship to the CPI. We got an inverted head and shoulder, shoulder, head, shoulder, and then hopefully we can get a big takeoff. I think that we're primed for a move in precious metals between now and in a year. I know that's a big window, but you load up, and if you get this gigantic move, it doesn't matter that you spent 5-6 months doing nothing. And it may be sooner than that. Maybe it's only a month or two. But I do think we're going to get a huge move there. Here's one. Just talked to a guy who works in PE at Bain Capital at the restaurant. He told me they think a Fed hikes rates to 12%. Interesting conversation. 12%. That is very high. REMX on the move, breaking to the upside. I think that looks fantastic for rare earth metals. I think they move very similarly with the price of precious metals. The rare earths do. India's petroleum minister predicts that India's oil consumption could rise from 5 million barrels a day to 9 million barrels a day. Where are all of these barrels going to come from? If they increase it 4 million barrels, where is it going to come from? Are we fighting with India for their production and they're creating alliances with the exporters around the world? Where are these barrels going to come from? It's going to get so tight. So tight. So I'm just shaking my head, guys. I'm shaking my head here. Uranium, if 1/10 the capital that flowed into GME, which was a stupid squeeze, went into SPUT, it will drive the physical uranium price north of $200 a pound in months. And that will 10x all the uranium stocks. If just 1/10 the capital went into something that actually does something for our world. Here's uranium futures prices. It's definitely broken out and it's ready to go. Even if it's not going to go straight there, we're going to head higher. PLG, this is a small speculative company, has broken its downtrend. That's looking fantastic. It says not a bullish divergence. U.S. financial conditions are now at their tightest level since April 2020, while the S&P 500 is yet to retest its recent lows. Look at this gap here, guys. This has been pretty correlated. We're starting to see a divergence. And the S&P 500, I think, will probably catch up to the downside of this divergence. But I'll end it there. That's what I've got today. Hopefully you guys enjoyed it. I still think that we're going higher, and I think there's going to be higher rates of inflation going forward. Because of the strategic petroleum reserve releases of oil, I think that's held lower. I think when they stop releasing it, it's going to go higher, and it's going to impact the inflation numbers again. They're doing this on purpose. It's because of the elections, and it's all going to catch up with them at some point. So I'm going to remain long. If you guys want ideas on how to play all this, definitely subscribe to findingvalue.com, the Platinum membership. We've got a question and answer session coming up. I believe it's going to be on Saturday, 7 a.m. The reason I say I believe, I have to check my schedule one last time. 7 a.m. Saturday, Mountain Standard Time. That's what I'm projecting. I'll put that on the website today. I'll make that update. And we're going to have a training session the week after. I'm still trying to take time off to do that. It'll probably be in the middle of the day. I'll record it, and I'll have people attend. And that's technical analysis training. But that's what I've got for today, guys. Hopefully you enjoyed it. Give me a thumbs up. Subscribe to the channel. And we'll catch you next time. This is Finding Value.